Welcome back to the channel. Today we're diving into a powerful, often misunderstood financial tool: high-limit unsecured term loans. If you're a business owner looking to scale without putting your house, your equipment, or your personal assets on the line, this is the episode for you. Let's start with the basics. What actually is an unsecured term loan? In the traditional world, if you want a large amount of capital, the bank usually asks for collateral, a lien on your real estate, your inventory, or your heavy machinery. An unsecured loan, however, is granted based on your business's financial health, your revenue consistency, and your creditworthiness. You get the lump sum of capital, you get a fixed repayment schedule, and most importantly, you don't have to pledge specific business assets to get it. So, why do high-growth businesses love these? 3 reasons: speed, protection, and flexibility. First, speed. Because there are no appraisals, no title searches, and no lengthy asset verification processes, these loans can often be funded significantly faster than traditional bank financing. When an opportunity to acquire a competitor or bulk buy inventory hits your desk, you don't have 6 weeks to wait for a bank to inspect your warehouse. Second, protection. When you don't pledge collateral, you're keeping your balance sheet clean. If you decide to go for a larger, asset-based financing round later, your core business assets are still unencumbered. You haven't tied your hands. Third, flexibility. Unlike equipment financing, which dictates exactly what you can buy, an unsecured term loan is general-purpose capital. You can use it to bridge a seasonal gap, invest in a massive marketing push, or hire the specialized talent that will take your business to the next level. Now, let's get to the high-limit part of the equation. Getting approved for a small, unsecured loan is one thing, but reaching higher funding tiers requires a different level of preparation. Lenders are taking more risk here, so they'll look closely at 3 pillars. The first is your revenue. They want to see consistent, verifiable cash flow. If your business fluctuates wildly, have your documentation organized to explain the why behind the numbers. The second is your credit profile, both business and personal. Even though these are business loans, lenders often look at your personal FICO score as a proxy for financial responsibility. Finally, they look at your debt-to-income ratio. If you're already over-leveraged, that's going to be a red flag. My advice? Don't go into this process blind. Before you apply, take a hard look at your bank statements and your P&L. If you can clearly demonstrate how this capital is going to generate a return, you're already ahead of 90% of other applicants. At Complete Funding Solutions, we help established owners navigate these programs every day. If you're ready to see if your business qualifies for a high-limit unsecured term loan, don't guess. Click the link in the description to find out today. We'll help you compare your best options so you can choose the capital that actually fuels your growth, instead of just adding to your overhead. Knowledge is the ultimate leverage. Let's get to work.